Hello, everybody. Welcome to my presentation. This is creating a presentation with presentation within a presentation. This is creating a presentation with Google Slides, and this is for Meta platforms. So my disclaimer and copyright notice. The information and opinions in this presentation are those of the author only and not the author's employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. The presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2022 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. Okay, so what we're going to be going through and doing today is I'm going to be taking you through a presentation with Google Slides. And I want to say that one of my colleagues pointed this out to me. I have not taken a class on this, and I was a CFO in my former life, but I tend to put too much information on slides. So make sure you take a class and probably borrow other people's work. It's the best way to go through and do it, or kindly give attribution. You access Google Slides through slidesgoogle.com, and we'll go ahead and get this started. So let's go ahead and take a look at where we are for this. And so this is the presentation I have made. Basically, this is stock compensation expense for Meta platforms. This is my group project for spring of 2022, Accounting 301A. Yikes, don't even get my class right. Accounting 301A at Cal State Fullerton, Professor Bennett Tchaikovsky. And so my group members are myself, my two cats. So let's go ahead and get it going. So what I was asked to do and for this project is this last part of the group project is to talk about the impact of stock compensation expense, or SCE, on Facebook, the current disclosure and alternative disclosures for stock compensation expense, a capitalization table for Meta platforms, which is traded under NASDAQ under FB, which is their old company name, or Facebook. So let's first talk about the impact of stock compensation expense on Meta platforms. So the stock compensation expense from January 1st, 2009 through December 31st, 2021 for Meta platforms was approximately $39 billion. And that impact on additional paid-in capital and retained earnings was materially significant. And if you look at this over here, if we were just going through and reclassifying the amounts of stock compensation expense to if we basically removed it, you'd be looking at about an impact of about $39 billion. So is stock compensation expense and let's just talk about this, is stock compensation expense where the company is required to outlay cash funds? And the answer to that is no. When we are looking at stock compensation expense, we are typically debiting stock compensation expense and we are crediting additional paid-in capital. There is no requirement by a company to go through and there's really no cash outlay. It's very, very rare. You're usually receiving money if somebody's exercising it. So this raises the great question, is that what is additional paid-in capital common stock? Does it represent the amount of the cash outlay that a company receives in excess of par value? Or is it an account that's used by accountants to place non-liabilities items to balance the balance sheet? And you'll sometimes also see this. There's a term called other comprehensive income that's used when we are evaluating investments, but that's neither here nor there. But again, what we're focused on today is additional paid-in capital. Should this represent cash, or can it be representing other things? So if an investor looks at additional paid-in capital, and if that investor, and this is really who we are creating our financial statements for, if an investor goes through and looks at our financial statements and they see 55.8 billion, is that how much Facebook raised to date? The answer to that is no. And if we look at the amount that Facebook raised, or what Meta platform raised, was 16 billion. And ironically, or factually over here, that if we remove the stock compensation expense, this shows a better, more true picture in terms of what Facebook is, or what their additional paid-in capital is. So it's had a pretty big impact on additional paid-in capital. So what are some alternatives for addressing stock compensation expense in the future? Well, the first question would be is would we go through and restate the past? And the answer to that is absolutely not. You could change it so in the future you would not be showing stock compensation expense. But if we are restating the past, it's going to be you would not, it would take you would have to go back, and it wouldn't be a huge deal, but I don't see that happening realistically. I don't think that they're going to make that go away, because they made a decision back in 2000, I believe it was 2006, to go through and to require that stock compensation expense be included as an expense. And so I don't see them taking that away. However, what are some different things we could do? Well, one of the things we could do is we could break out additional paid-in capital. And we could do this by showing cash offerings. And I just made this as an estimate. We show additional paid-in capital stock compensation expense, and then we show this as an other. Now, if we did this, then an investor could just say, oh, if I take this and I add it into the retained earnings, this is what the number really is. So again, it's something that we could definitely do. Now, one of the things where Facebook is being incredibly progressive in terms of how they're going through and showing their disclosures is when it relates to how much stock compensation expenses impacted their numbers. If you look at this below, what they're showing here is that share-based compensation expense that's included and the expenses that is getting us down to net income is 9.1 billion. So if this was being added back to net income, you're looking at about 48.4 billion of net income if stock compensation didn't exist. So I want to applaud Facebook on this particular item in terms of that the share-based compensation expense is being highlighted separately here, which I think is an extremely good idea. So capitalization table for Meta platform. So what exactly is a capitalization table? It is showing an investor how the investor could have their interest potentially diluted via a variety of events. It can happen, and you don't have to include this in your presentation, but I'm just giving this to you so you know. Shares issued as a result of stock compensation expense or stock compensation, debt that is converted into common stock, preferred shares that are converted into common stock, and if you have anti-dilutive stock provisions, which is extremely rare for publicly traded companies because the SEC generally will not allow those types of companies that have those provisions, that would also be something that you would want to note. So when we look at this, what we're saying is, what is the capitalization table for Facebook? What does this look like? Well, we've got Class B shares outstanding is 413 million. Class A shares is 2.3 billion shares outstanding. And and this is coming directly. So when you're looking at the outstanding shares, this is directly coming from the owner's equity section of the balance sheet. Now, when it comes to the options, this is where you'll have to go through and do some digging. But right over here, this is what we're more interested in, is like what dilutive events could occur. And for Facebook, this is really minimal. Like if these 134 million shares were to be issued, then you'd have you'd have dilution of a very small amount of dilution relative to the Class A shares, a little bit more than 5%. But if you threw the Class B shares in there, it's not going to be very significant. And the reason why this becomes so important, why is that strike price so important, is that if we type in Meta platform stock price, so right now it's at 186.99. If I look at this over here, both the average share, the average price per shares, these are both out of the money. So for Facebook or for Meta platforms, the likelihood of these being exercised is practically none, because the this employee would say, well, why would I pay $200 for something I could buy it for 180? So that's more than likely what would happen. But again, this is a weighted average, but as you can kind of see here, given the stock price today, the likelihood of these being exercised is not very good unless the exercise price was way lower. Now, here's a thing that I've added, and this is actually really important for Facebook because or for Meta platforms, and it's because Mark Zuckerberg has smartly, or whatever you want to call it, he has basically made it so that he will never lose power. And that is extremely important to tell your shareholders. If you have a company where there are voting shares, right? And this is really what's important, is that we have to show our shareholders that if you buy a share in Facebook, you're not going to have an equal say, because guess what? He owns 62% control of voting control of the business. So he's going to be able to basically dictate who comes into, who's the CEO, who's the CFO. He can basically vote his way in. So this is something that is not a part of the capitalization table, but I am including it in here because as an investor, you would want to know, if certain shares have more voting rights than shares that I'm buying. So if I buy a Class A share, I think I own this amount of stock and I own this amount of the company. But the reality is you don't have the same rights in terms of voting. So in a capitalization table, if you have something like this, which is a very unique feature, you want to make sure that you're going through and highlighting it to the investor. So I want to thank you for joining me here today. And let's just kind of go back over here to our slide presentation. So this is the presentation in terms of going through and creating with Google Slides. I want to thank you for joining me here today. I'll see you on the next video and have a great rest of your day.